The Federal Reserve Bank of the United States is arguably the most powerful financial institution in the world. But not a lot of people, or even a lot of political leaders for that matter, know how it works behind the scenes. Now that increasing pressure has been put on the chairman of the Federal Reserve to lower interest rates or make way for someone who will, it's probably a good time to look at how those decisions really get made and who has a say in what the Fed actually does. The unintuitive and frankly at times confusing nature of the Fed is built on some systems of checks and balances, mixed in with a lot of historical compromises, which is probably part of the reason why there are so many conspiracy theories surrounding what this institution actually does. So, what does the management hierarchy of the Federal Reserve Bank look like? Who is really in charge of setting interest rates? And finally, why are there actually 12 separate banks? Do you ever feel like your searches, clicks and transactions have been tracked and monitored? I certainly do, and well, it's because they are. Internet service providers log your online activity and sell your information for commercial purposes, exploiting your preferences and behavioural habits. Worse still, if your internet connection is unencrypted, say in a cafe or other public space, hackers can steal your passwords and identify and install malicious software on your device. Fortunately, there is a solution. Today's sponsor, Private Internet Access, protects you from the prying eyes of hackers and internet service providers that can view and exploit your personal data. Its virtual private network hides your IP address and safeguards your internet connection using encryption via world-class server infrastructure. This literally saves me hours of time, as it means I can work safely when travelling on public transport without worrying if the sketchy dude on the other end of the carriage is trying to get my card details. But it doesn't just protect, it also enhances your internet experience. With IP addresses from 91 countries to choose from, you can overcome the regional content restrictions in your area and gain access to additional websites, apps, broadcasts and shows like AMC's new zombie thriller The Walking Dead: Dead City, only available in the US, or all-time classic The Office US, which isn't available on US Netflix. Plus, with unlimited device connections, just one account protects your entire household, and with its 30-day money-back guarantee, there's no risk in trying it for yourself. So, for a quick and easy way to protect and enhance your internet experience, click the link in the description to get 83% off and 4 months free at only $2.03 per month. Okay, so Jerome Powell is currently the chairman of the Federal Reserve, which on paper makes him the leader of the organisation. However, that designation alone doesn't actually give him that much real power. His official powers come from the fact that he is one of the 7 governors that sit on the board of the Fed. The position of chairman is a first amongst equals kind of deal, where each of the 7 governors effectively has the same authority behind the scenes, but they put forward the chairman as the voice and face of the bank's operations. Now, in practice, this role does give them some soft power that other governors don't have. They get a slightly larger staff, they get to set meeting agendas, and they get to speak directly through public announcements. The words that the Fed chairman says are often almost as powerful as the decisions they make. And there have been several times where major market swings have happened because Powell or other chairmen from the past have not picked their words carefully. It also begs mentioning that, for what it's worth, the chairman gets a slightly nicer office and a slightly larger salary than the other 6 governors. Although, realistically, this official salary is normally not a consideration for the people serving on the board. $204,000 a year for the governors and $246,000 a year for the chairman is a lot of money, but most of these people are quite old after long careers in economic policy or banking and are quite well off. Now, these 7 governors are each appointed by the president and then approved by the Senate. After that, they serve for a term of 14 years, and it's almost impossible for any branch of government to remove them from these duties once they are in, unless there's gross negligence or dereliction of duties. This is because, as we discussed in our video back on EE, it's important that politicians can't pressure them in any way to do something like lower interest rates just to win political points. Once they have served their 14 years, it isn't technically illegal for them to be appointed again, but it almost never happens. Again, normally by the time people get to the level of being appointed to the Board of Governors of the Fed, they're usually quite old. However, there are exceptions, one being Jerome Powell himself. He was first appointed to be governor back in 2012 by Obama to serve out the remaining 2 years of a term from a governor who resigned, but then he was reappointed again for a full term in 2014, and his current term as governor will run out in 2028, where it's highly unlikely that he will serve again. The chairman of the Fed is selected from these governors, but only gets the position for 4 years before they just become a governor again. Powell was first appointed to this position by Trump in early 2018, and then reappointed by Biden in 2022 for a term that should end in early 2026, where he will still have 2 years left on the Board of Governors. One final thing on this group is that they are under no obligation to follow the directive of the chairperson. They each get one vote on banking policy, and if, for example, a complete patsy was dropped into the position of chairman, there's nothing stopping the other 6 from going about business as usual. It's also worth noting at this point that the Board of Governors does not set interest rates or control the money supply, at least not directly. We will get to the group that does do that soon. But the Board of Governors does get to set rules on things like reserve requirements, and they still do have a lot of influence. Each of these governors have their own staff of researchers and analysts to help them make informed decisions, and also carry out the central bank's other function, which is managing the 12 Federal Reserve banks. So, when the Fed was first established back in 1913, there was a real fear about centralising the USA's financial authority within Washington or New York itself, so just like the states had their own governments and institutions, the Federal Reserve was also split up. Now, this wasn't done on a state-by-state basis, it was done to represent certain regions with individual and relatively autonomous banks set up in Boston, Philadelphia, Cleveland, Richmond, Atlanta, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. Each of these banks serves their local area, and more importantly, actually does all of the work of a central bank for their respective member banks. JP Morgan, for example, would very rarely deal directly with the big office in Washington, they would instead work with the Federal Reserve Bank of New York. Now, the economy of the USA is so massive that each of these central banks oversee financial systems that are as large as most other central banks for an entire national economy. Each of these banks technically have their own shareholders. Those shareholders are the member banks headquartered in the regions they represent. So, for example, Bank of America owns shares in the Federal Reserve Bank of New York. The shares pay out a pretty healthy dividend of 6% per year, but they can't be traded at all. They're just sold to the bank when they become a member of the system, and they have to hold on to them. They do have shareholder votes though, which means that the private banks get to elect 6 directors to the board of each of these reserve banks. 3 of the elected directors can be bank staff, and typically the banks will work together to elect a few senior executives or an industry insider. The other 3 are specifically not allowed to be bank personnel, and are usually either academics or industry group leaders. Now, the 6 directors that the private banks get to elect are joined by 3 directors that the Board of Governors back in Washington gets to appoint, and then these 9 directors all vote to appoint a bank president, which handles most of the day-to-day operations of each of these 12 central banks. Unlike the Board of Governors, where the chair is always one of the governors, the Board of Directors explicitly cannot elect one of its own members to be president. The job of president is to make sure that their member banks are operating effectively and to manage liquidity so that cash keeps coming out of ATM machines and the financial system is well oiled. For example, when Lehman Brothers collapsed in 2008, Timothy Geithner, who famously called all of the bank executives to the Fed, was the president of the New York Fed, not the Fed in Washington DC. This also meant that he couldn't summon Wells Fargo to the meeting because that was not a member of the Bank of New York, but rather of Minneapolis. Now, each of the individual reserve banks also has some additional functions that they manage on top of running their region. The Federal Reserve Bank of St. Louis, for example, collects, collates, and publishes a lot of economic data, which is obviously very useful for other private and reserve bank managers, but more importantly than that, it's often really useful for nerds on the internet that want to make videos about economics. Now, the final job of these 12 presidents is that some of them will be called up to represent their individual banking region on something called the Federal Open Market Committee. This is a group that actually makes the big decisions at the Fed, including what happens with interest rates. There are 12 people that sit on this committee. The 7 governors from the headquarters in Washington, conveniently always giving them a majority if they choose to cooperate, 4 Reserve Bank presidents which are rotated yearly, and the president from the New York Fed who always gets to sit on the committee. Why does New York get special treatment? Well, it really is as simple as New York being a major financial hub as well as representing the largest banks in the country. It's this group that sets the rate targets, not the chairman of the Fed alone. Now, obviously, someone like Powell does have influence over which way this group will vote, but that comes from the respect that this committee has for his insights and direction rather than any formalised power. Now, if that all sounds a bit disappointing and you would rather learn about some leaders with some real power, we made a similar video on Iran's political hierarchy, which you should be able to click to on your screen now. Thanks for watching, mate. Bye.